Hi, Ben Kingsley here. In this Empower Wealth how-to session, I want to talk about whether the Australian property bubble is about to pop. Well, the first question is, are we actually in a bubble at all? We've definitely seen the Sydney and Melbourne property prices go very strongly over the last 3 or 4 years. And that's an interesting point, isn't it? Because most uplift cycles usually only go for around 2 to 3 years. And we've actually extended on from that because of this low interest rate environment. But for a property bubble to pop, we need to understand all the fundamentals in behind what actually makes for a correction in the property market. Now, what happened in the US of A, where we did see a large correction very quickly in the property market, was because the fundamentals were different than what they are here in Australia. So in America, they had non-recourse lending, which effectively meant that they could borrow money, but if the property price had dropped significantly, they could hand their keys back in and forego the obligation and requirement to pay the bank back. So obviously all the onus has become on the lender, and that's what caused that credit problem that we saw that was part of the GFC. Now in Australia, it's a little bit different. We have what's called full recourse borrowing, which means that it's our obligation to pay the bank back. So that basically meant that the fundamentals are really strong. So in other words, you can't just forego, otherwise the banks will chase you for any loss that they will experience. And your bankruptcy laws here in Australia are a lot stricter in terms of being able to get back in and borrow money into the future. So that's not to say that there isn't any risk in the market, but the underlying fundamentals here in Australia are definitely different. And when you've got different fundamentals, it means that the marketplace works in different ways. So if we go back and have a look through history to see where there were other big, large boom periods, and then we look at the correction periods, were they actually busts? Did the bubble pop? And the answer to that is no, they didn't. We've seen over the 19th century and early into this 20th century and 21st century, very few corrections of more than 10%. In fact, in our bigger city locations, it's very rare that we get a broader market correcting more than 8 to 10% when we go through the correction cycle. Now, that's not to say that there still is an inherent risk in the property market, because there absolutely is. And we definitely can see that in marketplaces like more speculative areas like gold mining towns or just general mining towns, where you go through these boom periods and then the jobs or the gold's not there. We're talking about the turn of the century stuff, to where we are today. So it's really important to understand that when the economic fundamentals start to collapse around it, that does present inherent risk. And you definitely see larger corrections in those types of environments. But the fundamentals are still pretty good when it comes to looking at our bigger cities. Population growth, reasonable growth around the economy, and those things, if they were to slow, would certainly impact on valuations. But are we going to see a complete collapse of the property market? Well, that's unusual and would require a global event or some significant deterioration that we can't necessarily see on the horizon. So to understand that, you need to understand that property is an essential need. It is shelter, okay? And the market will find its value with the confidence that it has in being able to borrow and repay that money. And that's why it's an illiquid asset as opposed to a liquid asset where we see in the share market. And that's why you see the higher volatilities in those types of areas. So let's quickly recap. Is Australia in a property bubble? It's not really in a bubble. It's more in a balloon where we're going to see the air ease out of it. Are property prices eventually going to correct? Yeah, there will be some areas where property prices will come off their highs. No different than any market cycle where we see valuations eventually getting ahead of themselves. When will that happen? Well, that's a crystal ball question. Hard to work out. But with low interest rates, good job growth, we could still see some potential growth in the market to come. In some areas, in some cities where the economy is slowing or declining, such as Perth and Darwin, we're actually seeing property prices retreat and supply coming online in terms of people trying to sell their homes because people are migrating away from Perth because there's not as many jobs in those areas. So it's an interesting time, but we're certainly not in a bubble. You really need to be sophisticated about how you approach your research and your asset selection. If you have a long-term view, then hopefully your conditions will be great and you'll see some great passive income. If you have a short-term view, and you're going to speculate, well, it may not be the time to be speculating in property at the moment. Thanks for watching.